I went on, I'm gonna date myself here, monster.com. That's how I found the first place I worked at. And they no longer exist, but they were a total sweatshop. Total. Oh my God. But I learned a lot, like, especially what not to do. And I learned a lot about the characters and personalities in a very short, speedy, because, I mean, they went through people like underwear.
Welcome to Get Real 411, the podcast where real experts give real advice on all things real estate. I'm Jamie.
And I'm Brad.
Join us as we explore real estate successes and pitfalls through the eyes of our esteemed guests.
Now let's get real.
Today, we are joined by our good friend and industry leader, Eddy Perez, CEO of EPM. Hey, Eddy, welcome.
Thank you for having me.
Yeah, excited to have you. Eddy and I had the pleasure of talking a couple of weeks ago when you were out of town, and Eddy put me to work. Good. So we had a short talk, but then he said, "You know what? Surprise me. Anything's on the table. Just ask away." So I said, "Okay." So I did as much research as I could. I'll try to surprise you. Now, I doubt I will, because you've had a lot of interviews. But let's get into it. I think. Look, our audience is made up of, originators, owners, brokers, but consumers as well. So we're going to kind of get into a little bit of everything. But I think starting with just kind of your background, and you've gone over this with many, different interviews, but just maybe touch on, your background, your dad, your mom, how you got into the mortgage, and kind of the time frame there. And then as you get into that time frame, I've got some questions for you.
All right, I'll try to do the Reader's Digest. It's more about the audience and trying to get content out for them. But first generation born in this country from Cuban immigrant parents. I did not grow up in Miami as much as people think. My parents, actually both Cuban, did meet in Atlanta, did not know each other in Cuba. Got married in 1968. I was born in 1976. Grew up here, all in the city of Atlanta, in the inner city. Got to see a lot of things that not everybody's used to, that actually paid a lot of great advantages today at this day and age. I was very fortunate to grow up in an environment that I definitely learned diversity of thought and inclusions of all walks of life before it became cool and trendy. I even went to college in the city of Atlanta at Georgia State, became a stockbroker first, and then in the 2001, kind of the dot-com crash era, right around September 11th, industry changed. A lot of things were going on.
What did you study in college? What was your degree in?
Finance.
Okay.
So got into mortgages. My father had been a residential contractor entrepreneur. So I kind of knew the journey. He was more of a sole proprietor. He had a good amount of employees and kind of painted me a great picture. My mom was a teacher's aide. They didn't honor her degree in this country. She was a teacher in Cuba, so she had to be a teacher's aide. And, my parents just didn't have the resources to go back and go get a college degree back then, or time for that matter. So became an originator, went from an originator to a sales manager, then a broker owner. And then in 2008, in the crash, that was very, very similar to 2001, very similar language. The only difference is they substituted a stockbroker for mortgage broker, and that's who they were blaming for everything. I'm not going to sit here and say that there wasn't fault throughout the industry, but like I always tell people, it was a massive fault all over the place. And you can't have a mortgage broker without a mortgage lender or consumers. However, that part of the equation is always left out because they always got to make a villain out of somebody. And I learned that having been a stockbroker. And that did teach me that I either needed to go all in and become my own lender and then serve the community back, or go all out. There were really, at that point, there was no other thing to really do. And I'm glad that I did.
Yeah.
That's kind of led to where we are today.
So I have an interesting question for you, because a lot of people, we see the leadership role you have today. We see a lot of people, maybe only know you for the last 5 years, and they see EPM, they see the other ventures that you have taken on. But the reality is you did go from originator to sales manager to entrepreneur in a pretty short window of time. And it might be interesting for our listeners to know about how long were you an originator? Because if memory serves, it was somewhere around like 02-ish that you jumped into the business.
Yeah.
And by 08, you and your then partner were starting what is now EPM. Is that correct?
So we actually became a broker by '05. So we actually started the entrepreneurial journey, but we still kept originating. And we kept originating probably till some capacity, I'd say 2010, 2011, 2012, somewhere in that ballpark. And I still get leads to this date. I just pass it on to my team. Like I still get, and some relationships that send business have just been former relationships of mine that I passed on. So I originated, I'd say, a solid 8 to 10 years through the journey.
Yeah, that makes sense. So, and I had heard that you started in the business because of your wife's hairdresser's husband, right?
Girlfriend at the time, she knew how frustrated I was with what was going on. And yeah, that's a true story. My now wife, girlfriend at the time's hairdresser's husband had gotten in the mortgage business. She said, "Hey, have you ever tried this mortgage thing?" I said, I know a little bit about it because I studied finance and my father being a residential contractor. I obviously a fan of home ownership and what it does. However, I don't know. It was one of those. And she said, well, this guy gets to talk to people on the phone, interact with people, and he's making X amount at 20 something years of age. And she says, I know how much from your days of being in a fraternity and just being social, how much you enjoy the interaction of others. I was like, wow, you can actually make a living really well doing that? That sounds like fun. Like that sounds more like a party than it does work. And I mean, there's a lot of work to it, but I still say that this industry, not only for what it does, is a lot of fun if you look at it the right way.
Have you been able to track that guy down?
She always wishes. She wants to tell that hairdresser that she literally fundamentally changed her life for so much positive.
Yeah.
So
Yeah, for sure.
she doesn't even remember who the hairdresser was, but that I went on, I'm gonna date myself here, monster.com.
Yeah.
That's how I found the first place I worked at. And they no longer exist, but they were a total sweatshop. Total. Oh my God. But I learned a lot, like, especially what not to do. And I learned a lot about the characters and personalities in a very short, speedy, because I mean, they went through people like underwear. I mean, they really did.
I bet you learned a lot about culture.
Yeah, I learned exactly how tough it is to maintain in this industry and how the wind can shift it and how you have to stay very athletic and always in front of it.
Well, look, like you alluded to earlier on, it was a kind of a repeat in 2007, 2008 of what had happened to the crash of 2001, which actually stemmed from 99. But, I think from the perspective of those that are in the mortgage business today, those that started just a few years ago during these robust refinance, times, to where we are in this extended downturn, people are in pain. And you're not immune to that. Everybody is. But referencing back to when you started, so you started in kind of the deepest depths of mortgage in 2008. And you had mentioned in one of your interviews that you and your partner went all in, that you took your entire savings and just said, let's do this. And you risked it all. So I think, what people really like to hear is, what are we talking about here? When you say your entire savings, you had worked for, 8 years originating loans and so forth. You probably acquired some assets, some real estate and that sort of thing during that period of time. But I mean, are we talking tens of thousands or hundreds of thousands? Like, there are people today that are thinking about doing that. And what did it take?
It was over $1 million.
It was over $1 million.
If you want to combined. Yeah.
And your partner,
because that's kind of the net worth that you had to have back then to even exist.
Right.
Yep.
The only way we could do it was to sell every stock, pretty much sell everything and drop it all into the bank account.
That's the spirit.
Like real estate and all that didn't count. I had some real estate, but who the hell had equity back in 08?
Anyway.
If you had it, it evaporated.
Right.
So
that's true then. Yeah. So I mean,
Yeah, we put it all
this is
in.
the perspective that people need, because a lot of people think it's easy, or they complain about it from the other side, right? And they don't really understand what it is to risk everything and really be purely an entrepreneur, where you're like, you're willing to risk everything because you have the conviction to make it work and achieve that American dream. And they think that they see you today, or they see people that are successful today, and they think, oh, pay your fair share. We hear that all the time, right? Pay your fair share. Well, you had paid it. That's how you built this, and you didn't inherit it. You weren't a trust fund baby. And so hearing
Yeah,
the details of that, I think, is important for people to give them perspective today, that, it's not that it's impossible. Anything is possible, but you really have to have the conviction, the stamina, and the disposition to understand the type of risk and pressure you're under when you put everything at risk. And so, kudos to you for taking that risk at that time, where very few did. I mean, we've seen, some other companies that kind of grew for that period of time and reap the benefit. One that comes to mind is Pinnacle.
Yep.
Pinnacle Capital, that was acquired by, by
Finance of
Finance
America.
of America, and then we went through that whole thing. But you know, uh, it's not easy, and today is one of those periods of times where it's not easy,
sure.
right? Where if somebody really wanted to do this, it would take a larger than that. It would take a large investment of capital, and then
Hmm.
all that risk, where you really kind of stop doing what you're doing. So, like you said, you phased out of origination. Um,
Hmm.
but you had still originated just because you had to, right? You probably needed some income.
Yeah.
Um,
Yeah.
but you could have stayed originating loans and been very successful and been a top
Sure.
originator. And today, you'll be originating a few hundred million a month, like, very easily. And not a month, but a year,
Hmm.
very easily. Do you ever think about that? Do you ever think about that other path that you could have taken?
Man, that's a good question. No, I never really have.
Okay.
I never really have. Only because I think I had seen the independence that being an entrepreneur brings to your spirit. Yes, it's very tough. However, I wouldn't trade it for the world, because there's different mindsets out there. You have the W-2 mindset, you have the W-2 plus bonus mindset, you have the 1099, and then you have the entrepreneurial. And my thought was that was the only way to really seek freedom. Freedom, you need two parts to it. You need liberty and self responsibility. And I thought that was the ultimate act to really bet on yourself, and be self made. Now, that doesn't mean it doesn't take a village, because it does. And there's a lot of character assassination, when somebody says they're self made. What I mean by that is, if I didn't believe in myself first, even before my parents or anybody, there's no way you can really take on the dark days, because there'll be a lot
Oh
of them.
yeah, and I think that we
And
downplay the word stamina so much because everybody sees, A to Z. But let me tell you what, the rest of the alphabet in between is hard and painful and can go on, particularly in the market cycle we've been in now for a very long time. You don't just have to believe in yourself. You don't just have to make the investment mentally, financially, physically, in every possible way. You also have to be able to dig deep during dark times that go on longer than you want them to, and still find within yourself that same passion that started you on your journey to get your butt out of bed and show up and to do the damn thing, even when you cannot see the end of the road and you cannot see the positive results. What are some of the ways? Because you talk a lot about mental fitness, physical fitness, and I know as a friend of yours how much you read. What are some of the ways that you dig deep to show up every day for your team?
so I'll say that I think I'm very fortunate in that category, and it's a little bit easier for me than most. English is not my first language, so I don't take that for granted. Uh, my family's story, I mean, I saw a lot of struggle, a lot of pain. Even where I grew up, my classmates, I grew up in an area that was more impoverished. Believe it or not, my parents, who had a very modest home, still my mom lives in the same home. We were considered on the up, and I mean, we were like barely middle class. Like, we'll just say regular middle class, but where I grew up very impoverished. A lot of single homes, a lot of single parent homes, a lot of parents that were on drugs, unfortunately, kids having to take care of themselves at a young age. So my perspective, I don't have to do what my father did. I don't have to steal a boat and row to freedom. I don't have to do that. I don't have to survive stage 4 cancer, or I don't have to be, once again, that 17-year-old kid who's told that your mother may live only to see your 18th birthday because it's a month from now. She's still alive, thank God. I don't have to be my uncle. I mean, his story is probably the craziest, as much as my father's is. I mean, he had to survive a firing squad every night for a year and a half. It's very brutal mentally. Unfortunately, when he died, it's like he was like in a constant panic attack for like 4 or 5 months. And finally his heart just came out. Like he had some sort of flashback after my father died, because they were best friends and they were brother-in-laws. And he just literally lost it. Even my aunt, who was schizophrenic and bipolar, that's why I'm such a proponent about mental health. Fortunately, I did not get any mental illness or anything like that. I'm very fortunate in that. I consider that. So, that's why I've been given so many blessings. That's why I feel like I have to bring it. I have to make this a fairy tale, not for myself. I owe it to all them. I owe it to this country. I owe it to everybody that was able to make it. I owe it to those that couldn't do it, that couldn't hang on. Because yes, it is about mental fitness and the 3 pillars, which is mental health, mental wellness, mental strengthening. I define those a little bit differently, and I talked about that at TAG. I do have to, because there were people that I watched, the outside of my family, that showed me it could be done. And I hope somebody out there I'm influencing for that, one way or another. Or if I'm not, that's completely okay with me. I'm a big advocate for the consumer. I think a lot of people don't look after the consumer. I think there's a lot of consumer protection, but I don't think there's consumer safety, as I call it, which is putting consumers in the overall best position. And that's one thing that concerns me about the industry, is because I remember what it was like to be Freddy Krueger in 2008, even though what we do. So my perspective is, I've just been very fortunate. I really have, in everything in my life. I mean, even as crazy as it sounds, being 5'10", my mom's like 4'11", my dad's 5'6", so I never felt short in my life. So, and being Latino, I'm not really short either, given the circumstances. So, in all my life, I've just been very fortunate. So I feel like if not, it's a complete waste and it's a travesty. And in particular, my dad, my uncle, and my grandmother, the 3 that believed in me the most, my whole life, that encouraged me the most. They would really die in vain if I didn't leave it all on the playing field for humanity. I just feel like I have to do it. It's almost like a discipline, not an obsession like some people think. It's just, I just owe it. I've been very fortunate. You get one life, and not everybody takes it as serious as they should, because they get too much into their feelings. And what I mean by that is, it doesn't matter how I feel today. I'm going to feel worse if I don't attack the day.
You're absolutely right. And I'm fortunate to call you a friend in life as well as in business. And every once in a while, I'll call or text you for a gut check on something business-wise or whatever. And one of my favorite things that you've said to me many times over the years is, in America, we don't have problems. We have challenges.
No.
And when you take yourself out of your feelings, to your point, and you approach the situation with the perspective that there is so much more to this world and this life than the one thing that's on your mind that you can't overcome, I think that it really is a way to process that and push through it and continue to show up despite whatever is going on in your mind. And so I use that a lot. Like I'll pull that out every once in a while, or I'll say, I should text Eddy and check in with him. And I'm like, you know what he's going to tell me? He's going to tell me we don't have problems. And he's absolutely right. So thank you for that little pearl of wisdom. I've carried it with me for probably about 3 years now. And it's something that I tell other people too.
Yeah. Look, not everybody has the ability to do that. And, we're fortunate to have that, to have the ability to wake up and just get ourselves in shape. But a lot of people just get caught up in just the miserableness of what they're going through, and it just propels. So I'd like to change gears for a second, because I want to talk about what you've done with EPM, because you've created a very unique niche for the company in really advocating for what I'd say is every type of borrower. You are the
Mhm.
number one place that originators think of when it comes to DPA, which is down payment assistance programs. Not every lender embraces that, right? There's some that just don't do them. They just won't do a loan with DPA. Others do limited and they don't really specialize in it. But if there's a down payment assistance program out there that can be accessed locally, regionally, nationally, you guys not only seem to know about it, you can educate the originators about it and benefit the consumer about it. And so tell us a little bit about that whole thing. I think this feeds into your whole mantra of, being there to help the world because of what your family had gone to. But how did you wind up, kind of creating this opportunity zone that others aren't in?
Sure. Uh, well, it goes down to the roots of even how I originated. I specialize in the first time, second time home buyer market. I'm going to say something that definitely resonates today. My father survived the early 80s when interest rates were at record highs. Right now, the perception record highs, but it's still a perception that's out there. And he survived because at that time he still did the first and second time home buyer. And he says, regardless, that's housing's a need, it's a significant want. And you got to be able to build a sustainable business. So it really plays into the business model of the first and second time home buyer. It's real easy, to do the vanilla stuff, and I don't mean anything wrong with that. We do plenty of it. It's just, if you can do the hard stuff well, the easy stuff is easy. And are you there for your client the first time? Are you there? Can you provide a certain value to help any of the people in your culture? Let it be somebody that works for you, or even, wonderful broker partners like yourselves. You got to give them the advantage and give them a value to take advantage, because unfortunately, a lot of people chase the vanilla stuff. And then at that point in time, and I have friends of mine in the industry who then, when I see at conferences, do nothing but complain about somebody else's interest rates. And I kind of tell them, you kind of did it to yourself. Like, you're swimming in a pool that there really isn't any value. So, of course, it's going to be about price. Like, I hate to say that, you kind of regulated yourself. And I never wanted the organization's mental health to feel that way either, because at the end of the day, these are humans. And yeah, it's a little bit tougher work to do a lot of the first time, second time home buyer market. However, it's extremely rewarding. A lot of them come back. A lot of them refer tons of people. A lot of them refer to partners of ours. The regular loans, like, you don't just pick up the same type. People have different, you know, demographics within their own family. And it's really about being an all in all lender. It's not about just serving one type of customer, because at that point, I just think you're not really fulfilling your cause and your mission. But I can understand why some people don't want to do that, because you could get a stigma and you could get viewed a certain way. But I always say, as long as you don't view yourself that way, who really cares what others think?
Yeah, and you guys have not put yourself in that position where originators think of you only for that, right? But they see
Sure, no,
that as a
no.
value add. And from a consumer perspective, to have access to down payment assistance programs that are forgivable. I don't know
Hmm.
if maybe you could talk a little bit about just the details of how it works,
Sure.
because I think
Well, it's a
that
grant. It's more of a grant. I mean, it is a down payment assistance, because anytime they get that, it's considered assistance. But, ours is a true grant. So they get the equity automatically out of the gate. Now, they can't refinance at least for 6 months, but that's more about how you got to go 210
Yep.
days because it's
CECL. Yep.
FHA. So that's more of a timing issue. And then, hey, given what's going in the market, sometimes, there really isn't a lot of benefit to save and refinance at the moment. However, they were able to get into a home for very little cash down and start building their own equity. And that's how we're really, as a country, going to transform wealth, because most wealth is built in this country, regardless uh, how wealthy you become
through real
off
estate.
real estate. And I
Yep.
think a lot of people don't realize how large of a sector that is in the largest economy. I don't think people can probably wrap their brain around how many people it influences. And that's probably why, because it's so large. I mean, the net effect is somewhere for $6 to $7 trillion with a
Yep.
T.
Mm.
hard for a lot of people to even wrap their brain around that.
Absolutely. So you did give us permission to ask anything. I've got an interesting one. So let's go back to 2020. The world turned
Hmm.
upside down. Most lenders were pulling back
Hmm.
on no score VA, low score FHA and VA, and some of that product mix. At the time, you and your leadership team made a business decision not to pull back on that product. And the obvious results were the backlash of EPM is slow and they have service problems. Now, we know that the reason behind that is that you were getting the only influx of volume of that product that any lender had because you were the only lender still saying yes. But I'd like to know, because it all sounds very altruistic, and it was, what does making a business decision like that for the period of time you sustained it until other lenders started jumping back on the bandwagon, what did that look like when you were looking at the financials?
I mean, we did well,
Good.
but everybody did well there. In that time frame, it wasn't just there. We didn't do what a lot of others did. We didn't goose pricing.
Nope.
That's another reason too. Like all of a sudden, we became super aggressive across the whole board, and that's never been our mantra. So if we were super aggressive across all, even the highest of A paper, that tells you a lot. We're very fairly competitive, but when we were winning drastically, that tells you where the market had moved, and we were still healthy at that point when it came to, trust me, nobody had a tear in our beer for our margins.
Excellent.
But my head of cap markets, Phil, that runs that, he's very God, what's the word, holistic about it. He's not going to mess with margins just because everybody else is, and that's why we always find it a little comical when people are like, hey, what did you do today? I know you did something. No, everybody else did something. We just stayed our same boat. But as crazy as it sounds, it wasn't as big of a business decision as it was more of a pay it forward decision. I knew a lot of borrowers would be left behind in probably the worst time when they actually needed somebody the most. And I knew it would cause us pain but it would also expose the cracks that needed to get cracked at that point in time. And I don't think people understand it's during certain business times when there's a influx of business, just market conditions. That is not the time just to take everything in. That's also the time that you can start fixing yourself if you actually lean into it. It's now during these tougher markets when you really floor it on your advantages. The difference is most people do the reverse. And I learned from the 2001 crash and then going into 08 how that behaves. And that was just a pattern that I learned. So, to answer you, we did well, but it was really about, I knew it was going to bring us pain, but I also knew the community would be very outspoken. And I knew at some point in time, we were going to probably burn some relationships. But what I always say on that one is everybody was slow. I love how you try to say it was just me, but I know everybody was, but I get it. Depending on who you talk to, I'm sure, which I don't take it personally. You said to every lender they were slow, they were awful. I know originators. I am one. I know that mantra very, very well. So that's a contract I have with myself. I don't take these things personal.
Yeah.
And you can't. And this goes back to the fundamental concept that if you didn't believe in yourself before your parents and everybody else that has come along through your journey through life, then you wouldn't be here today. And the hard lessons we've all learned, me as well, in the last few years, as my career has evolved quite a bit, is, all attention comes with positives and negatives. And it's a true test of your mental fitness, your personal beliefs about yourself. And
Sure.
You do have to arrive at a place where you become so comfortable with who you are and what you're doing. And it comes from a place of authenticity that, that old saying, those who mind, don't matter, and those who matter don't mind. It really is true. And it becomes something where you have to just consider that noise, unless it's a trend, unless it's true feedback. Because I think we both agree, criticism is a gift. feedback from people when it's given with love and good intent is one of the greatest things anyone can ever do for another person. But there is also a lot of noise out there, and I've watched, EPM, your leadership team, all amazing people, by the way. I've watched you guys weather a lot of storms over the years with different things that have come and gone. And there was one thing in particular that was a bit in the news that I know Brad wanted to ask about.
What was that?
That may have had to do with a racing team.
Oh, yeah. I thought we'd give you the opportunity to clear the air.
You may or may not.
Yeah, they clear the air on that because at the time, so there were some headlines. This goes, I think, 2 years ago, about the racing team that you were a sponsor for. And then all of a sudden they said, well, he reneged and, we have to sue him. And I know there was a counter suit and all that. I just figured give you the opportunity to clear the air on that. Because just knowing who you guys are, it's like there's a story, right? There's something behind it. If you're able to talk about it, share with the audience.
Well, there's certain things I can't discuss, unfortunately, because it's still a legal matter. However, if you read the counterclaim, I can point to it. It's pretty clear as day. That's what I can say there. It's very clear as Christmas what went down. And
so give us what went down with it's already public, in the public forum because it was in the lawsuit. What went down?
Long story. Okay. I'll sum up. I'm going to try to remember what's in there. I'm definitely not an attorney and, they write it all in 80 pages, but essentially long story short, we found out that the race car driver and the team that we had hired and were a part of and sponsored, and he was a veteran, no longer was driving the car, and it was all about that. And they had a new driver. And then when we confronted them on it, they told us kind of the reason why. And we said, well, why did you admit that to us and take multiple payments? I was kind enough to not tear up the agreement that day. I have regrets. I should have, because unfortunately I tried to do the right thing and not act like a lot of people would have and gave them a second chance. And I regret that. Because had I done that, it never would have hit the papers, would have solved a lot of challenges and a lot of the drama and a lot of the manipulation of words would have been taken away. But you learn as a leader, and I don't mind fighting things that are BS. I mean, they don't bother me. I know it bothers other people, and I'm sure it bothers people in the organization because they've told me, but it doesn't bother me because I'm not just going to back down, and just do it just to do it. I mean, trust me. There's worse things that have happened to me over the years of owning this business than that, and it's just not going to faze me.
Yeah, look, all somebody has to do is Google any company and any leader, and there's always something you can uncover. But in a time where the mortgage community is very small. They've got one channel of news that everybody's tuned into and everybody's looking to point the finger somewhere. You got a lot of noise from that. And so I thought I'd give you the opportunity to talk about it. And so, yeah.
It didn't bother me. I'd tell you it bothered the teammates more. And they knew it. It's not like I didn't share it. It's not like they didn't know what was going on. It's not like they didn't know that they violated the agreement and 60 days earlier. And of course, they're pulling some technicalities on it, but there's some legalities around all that language and everything. And, like I said before, I'm very confident this is going to go well for us. Yeah. I'm very, very confident it's going to go well for us when it's all said.
Yeah. Well, when I was reading it, it felt that way to me too. That's why I wanted to ask you about it. So, but, okay. So what I'd like to kind of just, ease into is, we talked a little bit about DPA. There's a lot of things that you guys are doing that other lenders do not. And although we talk about the broker channel having all these options, that they're the best place to go to, talk to an originator that's a broker, not every broker is created equal, right? Because not every broker has a number of different lenders that they send their loans to. They may only have 2 or 3 that they really like, or, they are vanilla. So you don't get those choices. So I would say this. So I've been originating loans since 1993, so for 30 years. And I would say that who you have access to as a lender is extremely important. So if you're listening to this show today and you're not a broker that's approved with EPM, I highly suggest you reach out and do that. Give yourself
Thank you.
access to these unique programs that you guys are doing. Because I see it. I see our loan officers every day. They're reaching out to your rep. By the way, your people are fantastic. They're giving them information. They're feeding information and inspiring them to actually bird dog and look for these opportunities. And these are loans that we couldn't send anywhere else. And then you obviously get the vanilla too, because they start building that relationship. So I would encourage anybody to do that. Just go to, EPM.com.
EPM.net.
Or
And,
.net.
I've been saying
I do
this
that too.
since before it was even cool to
I tried to
say
buy
it.
.com. They wouldn't sell it to us.
I've been shouting this
I've been
from
trying.
the rooftops
Yep.
as a broker in my community since way before it was popular.
Yep.
I am here to say I'm like one of the
You were.
OGs that saw the value in the relationships and the common sense underwriting, the ability to talk to a human being. And the sad part about all this, and it's one of the reasons I'm so glad leaders like Eddy and companies like EPM exist, is in many cases, it's not that no one else could do the loans that EPM does. It's that no one else properly educated themselves as a wholesale lender to understand how to do some of these.
And that
loans.
comes from the top down.
100%.
Yeah. So that's number one. And number two, as a consumer, make sure that you're investigating with multiple originators so that you are exposed to all the different programs that are out there. Just going to one insurance agent who works with Mercury and Geico and State Farm or whatever doesn't mean that you wouldn't get a better deal through Cincinnati or some other insurance company. So really, educate yourself and make sure that you're with somebody that really is giving you all their options.
And I would also say that don't chase rate and price. Rate and price are important, and you should always, as a professional, endeavor to deliver to your client the best rate and price you can. But you also have to factor service into that conversation. And a cut rate lender who can't get it over the finish line
There's a few of those.
is useless to you, when for oftentimes a very minimal change, not even to rate, but to price, sometimes to the tune of less than 20 basis points. You could be going with a company that will partner with you to get over the finish line in a reasonable time frame and overcome the challenges that are going to happen on loans.
Yep.
So I always encourage two things. One, always know your options. Don't stay in the sandbox where you're comfortable. Continue to use tools like Loan Sifter to look at every lender that is out there to see where the sweet spots are. And the other thing that I would say is don't box yourself into only one wholesale lender. Because honestly, and I'm not afraid to say this out loud, you're just a retail office of that company if the only lender you send
That's
your
okay
business
if you want to do that. Just be honest.
Yeah.
I mean, that's the and look, I get it. When I was a broker, I did business with about 5 to 7. But if every once in a while I got a very niche, unique deal, I was open to it. But yeah, your job is definitely to have more access and freedom. I definitely believe in that. I think it's good for the consumer. But like I say, I get it if somebody has just a handful they deal with. What I will say is there's not a whole lot of vanilla left right now. So
there isn't.
you gotta even the vanilla deals aren't so vanilla anymore.
Everything's got hair
The
on it.
credit score may be vanilla, but the income
It's
sure
like
as heck
the ice
is
cream
not.
cone where it's the chocolate and vanilla swirl. Nothing is vanilla.
It's dripping a little bit. So you just got to be aware of that and just be open-minded. That's what I just try to tell people. At the end of the day, we got to look out for the consumers. And you said it best. Like, I kind of use the hamburger, are you going to go to McDonald's to get your hamburger, or are you going to pay a little bit more for, a big chain where you guys are at, like In-N-Out? That's going to be a lot better for you, or at least you'll enjoy it. I don't know about health, but, tasting better. That's what you're paying for there. And that's a completely okay. And to your point, a lot of times it's not a huge difference at all. And you got to also think about it, what people don't. If that customer experience is going to be better because they're going to get it done, even on that, you've reduced their stress. And I promise you, as much as any consumer will sit here and say, especially buying a home, first-time home buyer, second time, it's a lot of stress. Just the pressure they put themselves onto, because they've all known somebody that got turned down at the last second, or they've heard the horror stories. We've all heard it. You're really looking out for them. It's basically your insurance to go back to that you're buying for. I'm like, hey, I'm going here. Even if it's a $300,000 loan, let's just say 25 basis point difference, $750. I promise you, if I tell them, hey, I can take you there, save you $750, but you and your wife are probably going to fight, or your kids, and get really stressed out, and who knows what you're going to say and regret later in life. Or you could have just paid $750, which more than likely was covered by some sort of seller credit or anything. Anyway,
right. Or you spent it anyway because you had to pay for postponing the moving truck, or there's all sorts of other expenses that come.
Extensions.
The
Lock extensions.
That
kill
right
people.
there is $750 right out the gate.
Yeah.
Okay, so you brought up insurance. And this isn't about insurance, but I want to talk about one more subject. As a pioneer in mortgage, which you're considered, there are some different philosophies on what the future of mortgage looks like. We have changed over the years quite a bit. Of course,
sure.
Pre the crash, pre Dodd-Frank and all of that, things were quite different. The way loans were priced, the way that, brokers operated, SRPs were separated out of FHA and VA pricing. I mean, things evolve, right? But for as long as I've been in the business, there's been chatter about the future mortgages. Will they be portable? Could you just get one mortgage and then move that from property to property? Could you, as an originator, originate with a client and build a relationship with them over long term and be like an insurance agent, where you get residual income every time it comes up for renewal, and you're there to service that account over time? These are things that have been thrown out for decades and discussed. But I think with the advent and with what's happened now with AI, with connecting your accounts electronically, with streamlining the approval process, with all these changes that are enabled by technology, that something will actually happen. What is that? What does a future mortgage look like in your eyes? What's the biggest change you see in the future?
Well, that had about 4 parts to it.
That's an 18-part question.
Knock them out.
I think AI will help out in the marketing, so authenticity is going to be more important for an originator. So I do believe that certain things will get done probably less expensive. So I think that'll help. However, I don't think it'll be an insurance agent type of role. And I'll explain why. Residuals are going to be tough too, and I'll explain why. First of all, to get one loan and then move it property to property, that's not how mortgage-backed securities are created and handled, and how you have to pay the investors. So that ixnays that one. What I find interesting is the residual part. The challenge is Pandora's box has been opened, and the MSR values have already been shared on the front end right out of the gate. So unless, I highly doubt this will happen with originators, you'll be like, hey guys, we're going to take 50 to 100 basis points on, and you earned it over the year. Yeah, forget about it. I just don't see that one. Wait a second, my price isn't as good. Even if collectively every lender got out there and all agreed, hey, we're going to create this, you can't. There's not a governing body, and you can't do price fixing either. But let's just say everybody said, for competitive reasons, one person did it, they got a lot of business, so then everybody competitively jumped. I just don't see that one happening. I know originators very well, and a lot of them get fixated on price, and to slowly earn it later over time. And then if the customer refis with somebody else, which could happen, they lose that out. I don't know, man. I don't know on that one. It's a great thought. I think the biggest disruption is going to be a couple different ways. AI, I think offshoring is going to be a big deal.
Mm-hmm.
I think more and more, especially offshoring, because now you have the Philippines and South Africa becoming big into it. So now you have people that speak English better and more fluently. So I think that people don't want to admit it, but they didn't like it when they couldn't understand the person on the other phone. I think that's going to start going away pretty soon. I think some services will still be in other countries, but anything customer facing, I think that'll be kept here, as well as, or countries that, a lot of people don't know this, in the Philippines, English is actually their first language. So
Sure is.
South Africa, obviously there. So I think offshoring is going to do it, and it's going to be very similar to the toy industry, how things used to get built here and then it went overseas. Because at the end of the day, I think why the disruption comes is, 2008 to 2022 was quantitative easing. Rates and margins were huge, and now they're doing nothing but quantitative tightening. And the Fed today didn't raise rates, but they were very hawkish. So when they're doing quantitative tightening, margins are only going to be a bit of math. So why is that important? Well, I think, believe it or not, with the regulations that were passed in 2010, and I've spoken out about it, I think the market goes back to what I joined. When I joined, it was 2/3 broker non-del and 1/3 retail. And I think retail still has the spot, and I have retail, but it's going to have to be more like the corporate retail that I grew up
And
in.
you guys already made a proactive decision quite a while ago to pivot retail. I remember those conversations with some of your leadership.
Yeah. We made it more of a very similar to our wholesale model. I mean, they share the same rate sheet because that was one of the big things that, retail takes more to function. No, it only takes more because unfortunately, after the crash, just a lot of layers got added that just really aren't necessary. If there's more now it requires more self-responsibility by the originator, but I think a lot of the originators want to lean into that and have the capability to lean to that. And now with technology where it is, they can plug into somebody that they're not going to drive down the street and see who their branch manager and all that is. And I think that's completely okay. So I think the big disruption that come in this industry is going to be more of a business model change and offshoring. Because I think this is going to be the era.
Well, and there's
of
probably
shrinking cost of manufacture.
yeah, and to that tune, there are definitely those that believe that's not even necessary. So I don't know if you saw this, but I think it was a week ago, maybe it was 2 weeks, and right now we're middle of June. SunWest announced that they closed their first mortgage with 0 people involved. It was all AI. I don't know if you saw this. So literally everything, including customer communication. So they had AI replying to questions. Everything was done electronically, and they closed it without one human interaction. So that's where kind of the thinking starts to go. The smarter these systems get, the more that we can connect them, the more that the banking institutions and the tax returns and the pay stubs and all these things are connected, which they already are. We use them, right, in our point of sale systems to validate. But the more AI can analyze and replace the underwriter and do the communication, create consistency, I think it becomes far more efficient. Well, what happens when it gets more efficient? It becomes less costly, right? So now tighter margins, smaller margins, they're realistic. Because our business, what is your biggest expense on your P&L?
Staff. Come on, everybody knows that one. It's always staff.
Of course, right? So if you can start reducing that and using it. Now, is that the right thing to do? Is it great for the economy? Is it great for humanity? No, we all can agree that. But is it inevitable? Yeah. I mean, we see cars driving themselves. We're living through today is going to be archaic. 100 years from now, they're going to be like, how did they actually drove cars? Are you kidding me? Like I just like to sleep when I'm floating around, right? And so things will evolve. So that's why we have to start thinking this way if you're in it for the long term, right? And everybody should.
And I definitely think there'll be AI for underwriting and all those pieces. I think I think relationships are still going to matter and somebody's going to bring the loan, but I definitely think from a cost, this is definitely, and a change of the guard happens about every 14, 16 years in the industry, speaking to vets and people who've been around a long time and what they've seen. The last one was the era of QE that shepherded in exploding cost. I think this is the era of QT, quantitative tightening, that shrinks cost. Yep. And I think you've got to be very forthcoming with your team and look, the general concern people have is this good for humanity? Like you said, are people going to lose their job? What people don't understand is from all the books I've read that are even a couple 1,000 years old, that's the same story they've been saying. Yep. There's always something new that happens. I mean, think about it. iPhones get created and now there's a gazillion shatter your screen companies that fix it and have made fortunes and own businesses, and then they sell cases or little things. Like things will get created, and there's a shortage of jobs all over the place that pay well, like the accounting industries, the insurance industries. Maybe that's where these people need to go. And that's completely okay if we become more streamlined, that they go to better, more consistent jobs that don't have the fluctuations like this industry have. And that's where I think people need to be vulnerable. And I get it, man. It's tough to see the tree through the forest, especially with the unknown. However, humans are pretty, there's a lot of ingenuity and creativity. Somebody will start to create.
It's an evolution. It doesn't happen overnight.
It's not the strongest of the species who survives. It's the one most adaptable to change. Change creates innovation. Innovation creates opportunity. We've seen this. Going back to the dawn of man, that is the fact. And so the fear of the unknown and the fear of change is the old narrative that people stick to out of their instinct for survival. But what we know and what we've proven is we will always find a way. That is our human nature. New things will crop up to create more opportunity.
Well, I mean, that happened.
You know what they also say about innovation, don't you?
Oh,
what's that?
What's that?
Necessity is the mother of
There you go.
innovation. So you talk about all of a sudden somebody's got to eat. They may create something new and dynamic just because of pure survival. Never underestimate the power of survival.
I watched the coolest movie called Flamin' Hot last night about Flamin' Hot Cheetos. You want to talk about necessity creating a new idea? You guys should check that movie out. It was really cool.
Yeah.
And you'll enjoy it.
That. Yeah. Yeah. Well, look, a perfect example of that, just to tie it into the mortgage industry about adaptability is, and you'll remember this, Eddy, of course you will too, Jamie, is when Dodd-Frank came out and everything changed, right? And, disclosures and all these things, and you had to do qualified mortgages if you wanted to be protected and all that. Well, what came out? Non-qualified mortgages, non-QM. I mean, it's subprime with a different name. So we evolved, we adapted, we overcame.
Prefer Alt-A, but
I gotcha. It's all in the same bucket.
Back in my day, Alt-A and subprime were distinctly different products that I offered my clients.
It's not hard money; it's private money, right?
Yeah.
So anyway, let's. I guess we're gonna start to kind of wrap it up here. Jamie has her famous question that she likes to ask at the end of an interview here, but we've really enjoyed the time here, Eddy. And when we post this. We'll put some links below so people can check out EPM, go to there. I know that you're always really free with the ability for people to reach out to you directly as well. So we'll put all that information below our post.
Okay, brother.
Thank you. Appreciate it.
You are sitting down with 20-year-old Eduardo G. Perez Jr. You're sitting down with him, knowing everything you know today. What do you tell him?
Wow, that's a great question. I don't know. Nothing. I would change the course of his life, and I wouldn't want that.
Let him live. Let him be authentic. Let him evolve.
Answer.
I love it.
Great answer.
I would want to see him more from a distance because I still had the same passion then. And if anything, at 20, I would have wanted to see myself at this age to see, did I lose the fire or not?
Did you?
Nothing.
No.
I would change the course forever. And I don't want to do that.
I've never had anybody on our podcast answer that way. And I think that is very true to who you are. Very accurate. And I can confidently say you have not lost your fire, and you exhibited in your leadership and your community involvement every day. And we appreciate that about you.
Yeah, it's still, trust me, my fraternity brothers say this is the same guy we knew, my buddy from high school. Because like I said, I grew up in an area that we all agreed, the few of us that got out of there, that we were leaving, but they all said, this is the same guy since he was 15, 16, and I'll always be that way.
What fraternity?
Sigma Nu.
Oh, shut up. I am a Sigma Nu as well.
Oh, nice.
San Diego State, Eta Kappa. Right on. Well, didn't know we
Georgia State, Eta Gamma.
That's so funny. Didn't know we had that in
Look at you two, fraternity brothers, all this time.
Dang, it's funny. I can't believe you never, not that people ever see it, but it's on my ring right there, the letters on my college ring.
Well, that's great. Well, we'll have that to chat about.
Definitely.
Anyway, you have not lost your fire. I see your stories. I see you working out. I see you throwing the weights around. You still got the fire. So keep it going,
Yeah.
Eddy. It was nice chatting with you today. We'll have to do it
Likewise, I
again.
really appreciate the opportunity. Thank you for giving time out of your schedule so that we could have some fun.
Our
Likewise.
pleasure.
Appreciate you. Have a great day. Get Real 411 is hosted by Brad Rice and Jamie Kavanaugh, produced by Stuart Jellin, and recorded live from the Amerifund Home Loan Studio in Simi Valley, California. You can learn more about the show at getreal411.com and watch full episodes on YouTube. If you're interested in being a guest on Get Real 411, email booking@getreal411.com. Please subscribe, rate, and review us on Apple Podcasts, Spotify, or wherever you get your podcasts.